In this video, you will gain groundbreaking insight into how to look at many charts all at once. These are secrets that are hidden and are only uncovered after decades and decades inside financial markets. What you will see here is information that could literally change your financial future. You'll also see how latest and current events are playing out inside the charts as well. Stay tuned, make sure you watch the entire video to get the full benefit. It's worth it. Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method, the world's most powerful smart money buy and sell level detection system. If you're new, a very warm welcome and welcome back, CTKS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love. If you would like to know where smart money buys and sells, please subscribe. Let's run the numbers. One of the most important rules that you can learn inside financial markets is Rule 4. Price moves in waves, and this is a Ken FT from OpenSea. Please let me know, what are your favorite rules? When price moves in a wave, it's always going by fear and by greed, by fear and by greed. Price is always emotional. Price literally is emotion in motion across millions of traders and investors. What do we currently see with the S&P 500? We can see that price is moving in a positive way. It's not actually decaying as a lot of people anticipate it to do. Remember, price is reality. Many people just focus on the chart they trade or invest in. This is a huge mistake. Why is that? Because if you don't have the foundations, if you don't understand interrelationships, if you can't find the market's focus and do your timing, if you can't figure out how to master fear, then when it comes to buying or selling effectively, your emotions plus your knowledge will undermine you. For example, let's have a look at gold. If we look at gold's chart, what is gold's chart actually doing? A lot of technical analysts would just look at this or maybe zoom out a little bit more and try to find recent indicative price or RIP, and then they would do a thing called SBA or story-based analysis. But the fact is that gold's been trading for a lot longer than a month or a couple of months. Smart money looks at charts completely differently to other people. Smart money understands that gold has been trading since 1833, not just for the past couple of months. Smart money seeks to find strong levels of algorithmic buy and sell confluence. This is really important to understand. You can see that gold made its way up through a smart money sell level. That means it's on par to move up to the next one. If it can't get through it, it will likely come back and retest and ping pong between levels. As it weakens, and this is important, it's giving a forward indication that it wants to move down to the next smart money buy level. And what do we see around that 1972 mark? Gold is currently 1971. It's making its way down potentially to the 1960. This is pretty much where most people stop. The normal thing that people do is they just look at what they trade or invest in and they ignore everything else. This is a huge mistake, and I'll show you why. Gold's fate is often tied to the DXY and the US 10-year and the US 2-year yields. If you were only looking at gold and not looking at the DXY, you wouldn't understand that the DXY has smart money support. It's currently 103.213. What we see when a particular asset class or a commodity or anything, any chart, when it gets down to a smart money buy area, if it makes its way through this, it's heading towards the next smart money buy area below. But if it rebounds, it's heading up to the next smart money sell area. That would be around the 103.700 mark for the DXY. I'll just quickly pop a chart of gold onto the DXY. You might notice a relationship. Well, let's make it a bit more interesting. Okay, what do you see now? Oh, let me know in the comments. What do you think the relationship is? just at the current time between the DXY and gold? Active learning is incredibly important. Please drop your comment. The market rewards you for synchronization. There's a big difference between looking and participating. The US 10-year has been trading, has chart history since 1912. If we just mark up recent indicative price, we will RIP our money because smart money and algorithms use that against the herd, against retail traders and investors. You don't want to be part of that group. When looking at the US 10-year yield, where is the objective dynamic market structure as marked up through the CTKS method? We can see the US 10-year is currently 3.721. There's a lot of smart money support from 3,700 down to about 3,666. This is a smart money buy area, and we can see it's been tested. What will happen if we come up to the next smart money sell level at around 3,749? What will happen to gold? This is something that will aid your synchronization. One thing that could help you, I'll overlay gold, just like I did with the DXY. The line in gold is actually gold, and the candlestick chart is, of course, the US 10-year. Why don't I do some magic and flip this around? I'm going to invert gold. Do you see any on average relationship between the US 10-year yield and gold? And what about the DXY and gold? You can see that you're starting to form a picture of probabilities. This is called stacking probabilities, and this is what we do. Active learning is absolutely critical. When I was teaching my students first and second year statistics, one thing that I did is always encourage everybody to actively learn. That is, make it real. But you could say, Ken, I don't trade gold. I don't even care about the US 10-year yield and the DXY. I just want to trade Bitcoin, or I want to trade crypto, or I want to do Forex. What you're doing is paving a foundation for all of those things. Our community is all about a professional investing and trading outlook and approach, a scientific methodology. If you're into Forex and you're looking at the euro dollar or the euro versus the USD, the first question is, how does this relate to the USD or the DXY? You can see here that I've overlaid the DXY, that's the line in green. What about if I invert the DXY? Ooh, there seems to be some association between the euro and the DXY. Please let me know in the comments what it is. Knowing associations is very important, but knowing objective dynamic market structure, which can only be revealed through the invention of the CTKS method, is far, far more important. If we look at this chart and try to figure out where the smart money is buying or selling, it's really difficult because the euro dollar has history going all the way back to 1971. Through the CTKS method, all of that price action is analyzed through a scientific methodology. It's one of the most powerful in existence. When we look at where the algorithms are hanging out in terms of safety nets, we can see this, and in terms of ceilings or roofs, we can see this. What is the euro actually doing right now? It's just been rejected from a smart money sell area. It's currently 108.148. The area from 78.72 down to around that 75.99 area is quite strong. And it's not because it bounced here. It's because the underlying SLs or Stanfield levels are quite strong in that area. What does this actually mean to gold's price? It means something very, very specific. For example, if price of the euro was to go into this area, what would happen to the DXY and what would happen to gold? This is how you must think if you want to be professional. Always remember that the market pays you for synchronization and it penalizes you if you're desynchronized. What is the best and fastest and easiest way to get synchronized? It's to understand and mark up with the CTKS method all of the Tier 1 charts. Tier 1 charts move the markets. You must be very exact when you align with the CTKS method. It's a very high precision based methodology. The S&P 500, the NASDAQ, the VIX, the DXY, which we've looked at. We'll look at Bitcoin in a minute. We've looked at gold, US oil, junk bonds, and we've looked at the US 10-year. Let's have a look at Bitcoin now. You must be very, very careful of SBA and RIP. SBA is story-based analysis and RIP is recent indicative price. Smart money looks at neither of these things. It looks towards market structure, which is revealed through the CTKS methods, objective dynamic market structure. Dynamic means it's continuously changing. You must mark up your charts and audit them every single month. If not, more frequently, depending on what you're looking at. This is exactly why the CTKS method service was started, to help save you time and to gain the highest level of precision. When looking at Bitcoin, what is happening with Bitcoin's objective dynamic market structure? Bitcoin is currently trading at $26,869. There's a structural smart money buy area hovering around the 26,650 mark. What do we notice inside Bitcoin's price history? What we actually do with the CTKS method, we're always looking for safety nets and ceilings far, far away from recent price action. Why is this? Because the markets are always chaotic. We need to know where the safety nets are, and we need to know how strong they are as well. Going from the other perspective, we must know where the ceilings are, where the resistance is, and how strong it is as well. Not all resistances are equal weight. Some are paper, some are concrete. By being a member here of our global family, you will find that I will talk about things nobody else is talking about. As an inventor, I keep on inventing. I'm inventing full time. That's what I do. Previously, we saw that Bitcoin was trying to get through this 28,000 area. It was rejected. What happens when price is rejected? It goes down to the next safety net, around this 26,650 mark. If that is rejected, where is it heading to next? It's heading to the next lower safety net, which was around 25,928. If it comes up, where is it heading to? The next smart money sell area. If it manage to convert that into a smart money buy area, where is it heading up to? The next smart money sell area. This is a fantastic way to constrain your risk inside the markets. And because it accounts for all of price history, not just recent indicative price, and it doesn't apply any SBA to it, story-based analysis, you can see what smart money sees. You can see what the algorithms see, and you can move with them. Using recent indicative price, people may say, oh, there's a smart money sell level here around the $27,500 mark. There's no smart money sell level there at all. It starts at around 27,900 and goes up. This is the thing that you must always be aware of. Retail and smart money are two different camps. Overlaying gold, we can see that there's a quite nice directional correlation between gold and Bitcoin at the current time. Both have been acting as flights to safety with the banking crisis and now the debt ceiling crisis. It's not surprising that they're aligning at the moment. Many times gold and Bitcoin will move opposite to each other. Just be aware of this. When it comes to gold versus Bitcoin, Bitcoin is highly risk sensitive. That means it feels the risk in the market first, makes it an incredible indicator of market sentiment and where markets could potentially go. That's why it's critical to understand objective dynamic market structure. You don't want to sell at support. Right at the moment, there's a fairly nice association, a fairly directionally positive association between gold and between Bitcoin. Remember, gold does not trade 24 hours a day like Bitcoin does. It's also really important to understand what's happening in the world as well. With the debt ceiling, if they don't raise the debt ceiling, what happens? Yields will spike. US 10-year, US 2-year. You already know what happens when the yields spike up to gold and Bitcoin, so bear this in mind. The CTKS method can be applied to any price chart. Forex, not a problem. Commodities, not a problem. Stocks, not a problem. Crypto, absolutely. Let's go back into Forex and look at the dollar-yen pair. Without objective dynamic market structure, this chart that's been trading since 1971, you simply don't know where the algorithms are hanging out. They're just waiting there, chilling there, waiting to either buy or to sell, and that's what smart money does. It's very patient. First of all, let's just check the dollar-yen's association with the DXY. From a statistical point of view, the DXY, which is that green line, looks pretty associated from a directional stance with dollar-yen. What could potentially occur if the DXY rallies to the Japanese yen pair? Please let me know in the comments. It's really important to do your active learning. And how, if you were looking at dollar-yen and you were seeing it spiking up, what could that potentially do to gold and Bitcoin? You can see the thought processes of smart money are just so very different from anything else. You can see inside the service the US versus the yen or dollar-yen combination is a tier 3 chart. The euro versus the USD is a tier 2 and the DXY a tier 1. You can think about it this way. A lot of Forex traders would potentially not be looking at gold. They wouldn't be looking at Bitcoin. They may just be analyzing just the thing that they trade. The better ones will analyze more, but the elite ones will analyze everything. The only decision we ever have to make in life is how much of our commitment, dedication, and attention we're going to give what we focus on. If you want to be elite in anything in life, you must give your dedication and commitment. If you're focused on that elite mindset, please drop the word elite into the comments. If you pop across to ctksmethod.org, you can learn how to do Level 1 and Level 2 CTKS Method Standard Certification. It's also available inside the Masterclass. The links to both are in the description of this video. I'm currently developing a range of indicators so that you can overlay the SLs on your charts in real time. This is only available to the service members. The service is about levels, the masterclass and the certification is about knowledge. In the next couple of days, I'll be updating the masterclass LV31 video. You'll get a copy of my live chart in there if you're a masterclass student. Yesterday, we uploaded our 900th community video. Kate and I literally pop out of bed each morning, ready to embrace another day of fun, finance, sharing, and knowledge transfer. We're not just an online community, we're a global family, hugging the globe like a big cozy scarf, woven with threads of positivity, dedication, and never say die commitment. Together, we're navigating the unpredictable seas of the financial markets, as brave as pirates but without the eye patches. Every chart we analyze is another piece of the puzzle to the key of unlocking our pot of gold at the end of the rainbow. Our synchronicity isn't just a fancy word, it's our secret sauce. It's like the perfectly timed chorus line in a Broadway show or the synchronized swimmers at the Olympics, except our performance pays in profit, literally. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.